For nearly 2 years, Wall Street's most closely watched question has been whether the artificial intelligence (AI) boom would sustain its staggering momentum or eventually face the cold test of fundamentals. Over the past several days, investors appear to have delivered an early verdict. Shares of some of the biggest AI-linked companies, notably Nvidia, Nvidia, and Palantir, PLTR, have sold off sharply, rattling confidence in the so-called AI trade. Even the behemoths of the Magnificent 7 inches, Apple, Microsoft, Alphabet, Amazon, Meta, Tesla, and Nvidia itself, are showing steep declines, sparking fears that euphoric optimism around AI may finally be hitting resistance. Once sky-high, now shaken. Nvidia, perhaps the single most visible symbol of the AI revolution, has been at the center of the narrative. Its graphics processing units, GPUs, power the vast majority of cutting-edge AI models, making its stock the market's most prominent barometer for enthusiasm around generative AI. After nearly tripling in value last year, investors seemed almost invincible holding Nvidia. Yet this week, the semiconductor giant has stumbled hard. Shares are down double digits in just a few sessions, wiping out hundreds of billions of dollars in market capitalization. Palantir, which built its reputation as a data analytics powerhouse and has aggressively branded itself as an AI-first company, is also facing pressure. Its stock, often seen as a speculative play on AI adoption by governments and large enterprises, has dropped substantially. Bulls had touted its software as uniquely positioned for the AI age, but the market has shown little patience for that narrative in the face of broader selling pressure. The Magnificent 7 lose their shine. Perhaps even more concerning for investors is that this downturn isn't limited to a single stock. The Magnificent 7, the group of mega-cap tech titans that collectively propelled the S&P 500 and Nasdaq to a string of record highs over the past year, are also sliding. Google's parent Alphabet, Amazon, Tesla, Apple, and Meta have all posted noticeable losses in recent sessions. For months, skeptics have warned that the market's historic gains were overly dependent on just these 7 names. Now, with all 7 showing cracks at the same time, those warnings appear prescient. Market strategists are quick to note that this synchronized decline is unusual. Typically, weakness in one or two of the large tech firms can be offset by strength elsewhere in the cohort. The current pullback suggests that the tide may be turning on the broader narrative. Investors are questioning not just near-term growth expectations, but whether the AI story has been priced too aggressively across the board. Bubble talk grows louder. The word bubble is one Wall Street usually tries to avoid, but after the dizzying run-up of AI-related equities, it has crept increasingly into commentary. The parallels to past speculative manias are hard to ignore. Just as the dot-com bubble of the late 1990s sent internet stocks soaring before a harsh correction, the surge in AI valuations has been driven as much by hype and fear of missing out as by fundamentals. Until recently, every dip in Nvidia or similar names was met with eager buyers who believed in AI's inexorable march into every sector. What's different now is that investors seem less willing to buy the dip. The shift hints at caution, that profits will take years to materialize for many of these innovations, while valuations already imply decades of growth. Broader market ripples. The pullback in AI stocks is also reverberating beyond the tech sector. The Magnificent 7 have such an outsized weighting in the S&P 500 and Nasdaq that their declines drag entire indices lower. Over the past few days, this has generated waves of volatility across financial markets, with traders pulling back exposure to high-risk assets. Analysts note that if the AI trade truly unwinds, the ramifications could be broad, affecting pension funds, ETFs, and retail investors alike. Still, not everyone believes the AI story is over. Bulls argue that despite near-term turbulence, the long-term secular trend of AI adoption remains intact. They point to rising investment in AI infrastructure, growing deployments across industries, and early signs that new products could reshape productivity. In this view, the recent sell-off is less about a bubble bursting than about froth coming off after months of relentless upside. What comes next? Where the AI trade goes from here remains uncertain. Some investors suspect this might be a healthy correction that allows markets to reset expectations before the next leg higher. Others fear that inflated valuations across tech could unwind more dramatically if earnings results failed to keep pace with lofty projections. For now, one thing is clear. The easy narrative of AI as an unstoppable driver of stock market gains no longer looks so certain. With Nvidia, Palantir, and the Magnificent Seven all underselling pressure, Wall Street is grappling not just with fluctuating share prices but with a deeper reckoning. Whether this is the first real test of an AI-driven bull market or the beginning of the bubble's end is the question hanging heavily over the market. If you liked this video, don't forget to hit the like button. It really helps the channel grow. And be sure to subscribe and turn on notifications so you never miss our next breaking news.